Picture this, the late 1990s. The internet was booming. Fortunes were being made and lost in the blink of an eye, and the world of high finance hummed with unprecedented energy. Wall Street was a whirlwind of brilliance, ambition, and, let's be honest, a fair bit of ego. But amidst all this sophisticated maneuvering, an unlikely investor quietly emerged, an investor who not only defied expectations, but arguably showed the world's most brilliant minds a thing or two about the market. What if we told you this market-beating genius wasn't a human at all? What if the secret to outperforming the experts lay not in complex algorithms or intricate market analysis, but in the sheer, unadulterated power of randomness? Prepare yourselves for the astonishing tale of a chimpanzee who took on the titans of Wall Street and, for a glorious moment, left them scratching their collective heads. Our story begins in 1999, a year etched into financial history as the apex of the dot-com boom. Optimism was intoxicating, and every internet company, no matter how outlandish its business model, seemed destined for stratospheric growth. This was the volatile playground where our hero would make her mark. Meet Raven, a charming chimpanzee with no formal financial training, no Bloomberg terminal, and, thankfully, no access to CNBC. Her investment strategy was as refreshingly simple as it was utterly unorthodox. Instead of endless research, Raven employed a much more direct approach. Presented with a list of 133 internet companies, she simply threw darts. Her method was pure, unadulterated chance, a stark contrast to the highly paid analysts poring over spreadsheets. From those haphazard throws, a revolutionary investment vehicle was born, the MonkeyDex Index. Raven's darts selected a portfolio of 30 internet companies, creating a basket of stocks chosen with absolute, blissful ignorance. Each company was weighted equally, a testament to the chimp's unwavering lack of bias. This was no carefully curated collection, no product of deep fundamental analysis or predictive modeling. It was a portfolio shaped by instinct, or rather, by the random trajectory of a primate's projectile. The MonkeyDex was ready to enter the most competitive arena on Earth. It was a bold, some might say foolish, experiment, but what the financial world was about to discover would challenge its very foundations. The stage was set for a showdown between sophisticated expertise and delightful, disarming chaos. The year progressed, and the market became a battlefield for investors. Every professional fund manager, every seasoned broker was striving to navigate the treacherous yet exhilarating landscape of the dot-com bubble. Meanwhile, the MonkeyDex quietly, almost impudently, began its ascent. Month after month, as human experts agonized over economic indicators and quarterly reports, Raven's randomly chosen portfolio defied all logic. It wasn't just performing well, it was performing spectacularly. The MonkeyDex was surging, a vibrant green line climbing steadily upwards on the hypothetical charts. While many professional funds struggled to keep pace or even stay in the black, the MonkeyDex was on a tear. By the end of its first year, Raven's DART-selected portfolio had achieved an astonishing 213% gain, a triple-digit return from a monkey, a testament to the unpredictable nature of markets. This wasn't just a quirky anecdote, it was a verifiable phenomenon. The MonkeyDex wasn't just doing well for an amateur, it was crushing the competition. Its stellar performance placed it firmly among the top funds in the entire investment universe. Raven's index climbed to an incredible rank of 22nd. This meant it had outmaneuvered, outsmarted, and frankly humiliated over 6,000 professional brokers and fund managers. Imagine the boardrooms, the stunned faces, the uncomfortable silences. Here was a chimpanzee with no investment experience, no market outlook, no understanding of PE ratios, demonstrating a superior track record. It was a stark, almost comedic illustration of how profoundly counterintuitive financial markets can be. So, how did a primate manage to best the best of human financial minds? The answer, ironically, lies in what Raven lacked. Unlike her human counterparts, Raven felt no fear when the market dipped, no greed when it soared, and no panic when uncertainty loomed. Human investors are constantly battling their own psychology. They hesitate, overthink, and often make timing mistakes driven by emotion. The fear of missing out, or the desire to cut losses too soon, often dictates suboptimal decisions. Raven, on the other hand, was immune to these human frailties. She bought her stocks randomly and held them without wavering. There was no overtrading, no reacting to daily news cycles, and certainly no agonizing over market sentiment. Her success highlighted the profound advantage of emotional detachment. Of course, no bubble lasts forever, and even the MonkeyDex was not impervious to the laws of financial gravity. As 2000 dawned, the dot-com frenzy began to unravel. The internet bubble, which had inflated so gloriously, was now poised to pop with a vengeance. The exuberance turned to despair, and the promising internet companies began their rapid descent. Naturally, Raven's portfolio, heavily weighted in this volatile sector, followed suit. The gains, once so spectacular, evaporated almost as quickly as they appeared. The MonkeyDex, like countless other funds heavily invested in internet stocks, experienced a significant, albeit inevitable, decline. It served as a stark reminder that even a random walk can't escape a market correction. Raven's story is far more than just an entertaining anecdote. It's a profound, thought-provoking lesson for investors, both novice and veteran. Her brief, glorious reign on Wall Street revealed a fundamental truth about investing. Sometimes, in irrational markets, randomness can indeed outperform supposed expertise. Her triumph wasn't about superior insight, but about avoiding the pitfalls of human nature. It underscored the power of a simple, disciplined approach, free from the emotional baggage that often clouds judgment. It suggested that often the less we try to outsmart the market, the better we might do. So, the next time you're agonizing over a stock pick, remember, Raven. Sometimes, not thinking too much, not overcomplicating things, and letting go of emotional control is exactly what wins. Perhaps, in the cacophony of the financial world, a little bit of monkey business is precisely what we need.